Checking 1 2, checking 1 2. Trying to see if I'm going live here, making sure people hear me. I'm not trying to mute myself. Let's see what's going on. Let's see here. All right, all right. So, just trying to make sure things are going. We're trying to go live here and making sure that I'm viewing this correctly. What do we got? What do we got? We got a new camera. We're trying to make sure that we see this the way it's supposed to be seen. Yes, sir. Let's see us. Let's see us. Let's view this channel. And there I am. All right. Yes, sir. All right, all right, all right. We're on, baby. Yeah. I'm trying a new camera. Finally, I figured, my phone was just not helping at all. So what am I gonna do? Uh, I'm gonna go live, and I'm gonna make sure that I have a different camera, just because it's been a minute since I actually got a 16 by 9 look, and right now we have a nice little 16 by 9 look going. So I did it. And so, anyways, what's up, man? What is cracking, my peoples? Savage of Wall Street here, coming at you live, baby. Just wanted to touch base real quickly. Seen a lot of FUD, right? Fear, uncertainty, and doubt when it comes to a lot of people on YouTube and different discords, as well as on Twitter. It seems like everybody's talking about the doom and gloom and how things are in flux. Jerome Powell is gonna get fired and it's gonna crash the markets, and you know, I'm just very disappointed because people just if for some reason they just think this time is different. They just keep thinking this time is different, and we've had numerous recessions. Right, this is a scary word to say. People just don't want to say it, but there is nothing different this time than 2022. There's nothing different this time than 2006, 7, and 8. Then we had the dot-com crash. I was a kid then. I obviously was not investing, but I am from the Bay Area here in California. So we used to see a lot of unemployment. I used to see a lot of people that one day were driving BMWs and Mercedes Benz, and the next day they were in the train or municipal buses, because a lot of them were my neighbors. Anyways, so I guess what I'm trying to say is, if you're watching this channel, don't feed into the negative vibes. Don't feed into the FUD. Let's keep our eyes on the prize, right? Let's keep our focus where it should be, which is making money. And at the end of the day, that's why we invest, right? That's why we're here, so that we can make money with as little risk as possible. And the best way to do so is, one, take your money out and hide it under the mattress, right? Nothing can happen to it there, and you'll be set, right? If your house or your apartment for some reason goes up in flames, then you have a lot to worry about. You could also put it in a bank on a CD that's going to give you 3-4% for every year that your money is there without you touching it. Or you can put it in a bank account, checking account that's going to give you 1% every year, and you can call it a day. Now, you can also be a little more proactive when it comes to your finances and say, you know what, let's invest it. Let's put this, in a brokerage account, and let me buy some companies that I have always thought or I'm investing in already. You might not be thinking that you are investing in a company when you're using a computer, but if you use anything that's Windows um, related, then you're using Microsoft. You're basically investing in Microsoft, except you're paying them for a service. They're not giving you anything back, right? If you have a Mac, then you're investing in Apple, right? You have an iPhone, you're investing in Apple. It's you're just not seeing the returns, right? And at the end of the day, that's kind of what you want to do. You want to see returns, and you want to make sure that the money you're investing has some type of basically guiding itself back to you, right? You want the return on your investment, and so um, I think that's probably the best way to approach, uh, you know, all this uncertainty. It's not like we didn't know what was going to happen, right? We knew that the markets were going to be turbulent. We knew when this administration took over that they were going to try to derail everything as we know it and to kind of put their own spin on things, right? We also knew they were quite the opportunists. And so it is what it is at this point. You can then, go into a shell and say, I don't want to play, you know, take your ball with you, go home, wait for 4 years, or you can be very proactive and you can say, you know what, I'm going to be in the game and I'm going to try to make the best of it, right? So that's what I'm choosing to do. And if you are looking at, you're looking at me on this channel, you can absolutely do the same thing. You can just take a proactive approach and say, you know what, Nvidia seems to be at a very low point right now. I would like to have an entry point in this, and I would like to start investing. It's not the worst of times to do so. People are always asking me, and I always come back to this because for some reason, when you are an investor, right, and like me, I have a little YouTube channel. I only have like maybe 1,600, 1,700 people that watch me, not at the same time, right? But they follow. And I'm always getting, emails and comments, and uh, people are always saying, and this is my personal life as well, people that I work with, or neighbors, or people that, that I know through my kids' school, and sometimes just people that I meet, and in everyday life. When is the best time to invest, right? And when you're at a 52-week high, you kind of want to take a wait and see approach. But at this point, a lot of things are at 52-week lows. And when that is the case, you kind of want to start getting your foot in the water if you follow, right? Um, Nobody knows where the bottom is. I really dislike when people go on TV or YouTube channels and then they say, we're at the bottom, because it's not true. Nobody knows what the future holds. Nobody knows how the market is going to react. And I specifically dislike people that flat out lie and try to take advantage of others. And they tell them, this is the time to invest, and this is the bottom. Um, I'm going to have a meet and greet at, like, whatever hotel, and if you pay $1,000, I'll give you 20 minutes of my time, and I'll tell you what the hot stock is, and I'll give you a tip, and then we'll call it a day. Um, Nobody knows where the bottom is, and nobody knows what the market's going to do. And whoever tells you otherwise, it's trying to sell you something and trying to take advantage of you, right? The approach that I like to take is I like to pay as little as possible for stock. And then when I do sell, if I do sell, it's been through selling options on those shares that I own, right? It's actually a lot better than my low sell high because I'm choosing my sell point. For the most part, people, you don't know when to sell. Nobody will tell you sell, right? And no, everybody will tell you when to buy. However, Palantir was just 120 bucks, right? But everybody thought it was going to go to 150. It did not. It came back down to like 70, 80 bucks. And now people that bought at 120, 110, thinking it was going to go higher, are holding the bag. So what happened? Um, People didn't take into account the fact that the market happens, right? And so what I did is I actually sold cover calls on Palantir. And although I didn't know it was going to go to 100, I was able to capitalize on the run and make premium or cash back right then and there so that I can invest in other um, companies or even back into Palantir itself, right? So nobody knew where Palantir was going to go. Just the same way that people say, Nvidia is going to go, back to 160, $200. They don't know that, right? At some point, yes, it may, but not right now, not this minute. There's just too much going on, and there's too much uncertainty. Some of the big outfits in Wall Street are actually trimming their position on Nvidia, and that's kind of a red flag. So if you're holding Nvidia and you've been kind of on the fence about, you know, uh, what you should do next, if you have 100 or more shares of Nvidia, I would recommend selling covered calls. Now, this is not financial advice by any means, um, because Nvidia could very well run to like 120 bucks, right? But let's say for whatever reasons it goes to 80 or $70, right? It's right now 100 bucks. What are you going to have to show for? If you don't sell right now, then you're going to feel like, holy crap, I'm holding the bag. And if you sell right now and it goes to 110, 120, then you're going to be like, oh, I missed out. I should have held longer. It's something that is not fair to do yourself because nobody knows what's going to happen, right? But what if you were able to say, hey, Nvidia's 110, 105 bucks right now. I'm okay selling it at 115 in 3, 4 months, 5 months, right? And what if you were to get paid like that? That's exactly what you can do when it comes to options. And options have been pretty sweet lately. I've been selling options on different of the companies that I'm holding. A lot of those companies have actually gone down in value. And someone could say, hey, so if you're so smart, why didn't you sell at a 52-week high? Because nobody knows when the 52-week high is. And the number that I have in mind to sell is higher than where the stock has been. This is exactly why every company that I invest in is a company that I'm willing to hold for at least 5 years, if not more. And that's the approach that if you're watching me, um, I would like to kind of get out there so that you're not one of those people that is very reactive and ends up losing their shirt. I also do not encourage people to buy options because there's always some smart guy that says, hey, I made a ton of money buying options. I bought options at $3 or $4, $5, and then the stock ran and I sold those options for $50 and I made $10,000 in like, a couple of days. Can that happen? Absolutely. It can happen. But what's more likely to happen is 90% of the time, those options are actually going to lose value. Instead of going to $10,000, those options are going to go to zero. It's just the percentage of options the dice worthless is always a lot more than those that pan out. So why not be part of the 90% instead of the 10%? That's the way that I look at things. What do we got here? We got Cannon Fodder Evening. What's up, Cannon? Thank you for watching, man. Um, I put this up on the Discord, but I don't know if people were able to see it because I'm kind of going with my laptop at this point. I usually use my phone, but I actually have my phone right here. So, um, kind of cool to see myself here, man. Let's see, we got Joey V. What up, Joey V? Thank you for watching, man. Um, hopefully Beach Boy will come in sometime because I think I sent something to him, but he's in Israel, so I don't know if he'll be able to watch this because he may be actually catching some Z's. In any case, yeah, man. So a lot of fun going on right now. A lot of people saying the stock market's going to crash. Jerome Powell is going to get fired. President Trump is going to appoint someone that's going to, bring down interest rates. He can't just fire Jerome Powell. It's not the way it works. There's a separation of powers when it comes to the finance industry because we're trying to be different than those authoritarian states, right? We're not in Nazi Germany. We're not in China, where the government steps in and tells people exactly what to charge, how to charge, and it tells companies exactly what they should be doing and how. We're a free market, right? And I think this is a slippery slope. If President Trump really wants to, tip, kind of dip his toe into these waters, he's opening Pandora's box, and people that run things for real, right? I'm talking about the Rothschilds. I'm talking about real old money, in China, in the United States, in the United Kingdom. That family that owns Canada. Last I checked, I think it was the royal family that actually owns Canada. I could be wrong, but I think studied that in high school. But it's a trip, man. I just don't think that um, normalcy is kind of the word of the year, right? I always try to hammer home the fact that the word of the year is going to be volatility, and that's exactly what I love because as an option writer, I am able to capitalize on that volatility because nobody knows what's going to happen, and so the IVs are always up and down, right? And the VIX is it's always ready to spike, and that's what gives you premiums when you sell covered calls or when you write cash secure puts and you get paid to actually buy a company. Um, and that's exactly why we're here, right? If you're watching me, it's you're one of those few people that are a small percentage of a small percentage. So you really could run things, And at this point, it's all about keeping your head on a swivel and being patient. Um, a good example of being patient would be GME, right? I know that some people may not like GME, but for an option writer like myself, GME is an ATM because GME could be $19 one day, and then in a week it runs to 27, and the volatility goes super high. In which case, I say, hey, I'm going to sell these options, these contracts, $30 contracts for a month out, and I'm going to bring in $3 or $4 or even $5 per share. So one contract is 100 shares. That's four. That's 300 to $500 in one contract. Imagine doing 20 of those. You're talking about potentially $6,000 to $10,000 in a month. I don't care who you are. $6,000 to $10,000 a month just for a couple of contracts on a company that everybody says is not really worth what it is. When they're sitting on $5 billion of cash, they had absolutely no debt. They have no debt. Uh, it's insane to me how people can say with a straight face that it's not a good company to invest in because it's proven over and over again that it is. And so that's exactly why whenever I have, you know, um, a few dollars extra and I see that the stock has come down to like the $22, $20 level, boom, I go with some cash secure puts, and I either take the premium, keep the premium, or I use the premium to buy more shares where it's at, and then I keep adding to my position. As a matter of fact, my wife sold a couple of covered calls on Friday because she said, oh, I actually bought some shares when it was, I think, $22 or something, and I saw that it was 27, and I sold a couple of covered calls, and I'm like, what? So, anyways, anyone can do this. Absolutely, anyone can do this, and I think that's one of the reasons that I am just so excited when I get on here and I talk to people about covered calls, um, because it's it's kind of a device that can keep on giving, right? It's the gift that keeps on giving. You can have 100 shares of GME, sell covered calls for $30. That strike date, GME happens to be at 27, 26. Guess what? You keep that three, four, $500, and then they return you your shares, your collateral, right? And then you're able to write another contract. And imagine doing 10 of those contracts a year, right? Let's say you bring $2 per share, right? You have 1,000 shares. You're making $200 a month, per contract. That's 10 contracts. That's $2,000 in 10 months. You've just made $20,000. So in a year, you make $20,000. That's pretty good money, man. $20,000 is something that can change the game for you. With $20,000, you can very well pay for your mortgage. You can pay for your rent. And if you can't outright pay for all of the rent, you can pay for a very large part. And that alleviates a lot of stress for a lot of people. Or imagine being able to pay off your car note and your bills, right? Your phone bill, your car note, your gas and electric bill, your water bill, your insurance, cable, your phone bill. I mean, the possibilities are endless, and you can definitely do very well for yourself by taking more of a proactive approach. You can look for a company like GME. You can look for companies like SoFi. There's Unity. There's companies that are a little more expensive, like Tesla, Microsoft, that can really bring in some money. But you're also going to need more capital. So if you're new into the game, or you're curious about getting in the game of option writing, I suggest starting small. Nobody uh, came into this world knowing everything, right? And although I believe myself to be a pretty good options writer, there's always something I'm learning. I'm always learning. I'm always going back to the basics. And although I know I can do butterflies and I can do iron condors, I can do a whole lot of stuff you can do. I keep it simple just because, one, I'm a father of three and my kids are young. They take a lot of time. So I don't want to be looking at my laptop all day. I don't want to be a day trader, right? Um, I want to be an options writer. Sometimes, by the time I live in California, so by the time 7 o'clock rolls around, the market opens at 6:30 my time, 9:30 New York. So I wake up at like 5:30 to read news and whatnot, and try to get ready for the day, right? To trade or to sell options. And by the time 7 o'clock runs, and I start, my day at 6:30. Really, it's whenever I start looking at the market because it's opened, and I look at the float. I look at the volatility of things and just the overall macros and micros. I see the president and see if he's opened his mouth and said something ridiculous, in which case that moves the market. And I'm able to then make a decision, and say, hey, I want to sell these contracts and I want to generate this money. And I'll tell you this right now. Sometimes I make $1,000 in the first half hour of the day and I'm done. Just because I could stay longer and I could, lurk around and make more money. But then that takes away from the quality of life, right? Not every day you're gonna make $1,000. It just doesn't happen that way. It could if you have a portfolio that's big enough, but I try not to be greedy. Um, so sometimes you're gonna go a day or two without writing anything, and that's okay, absolutely fine. And sometimes the market's gonna go against you, but I promise you this, more often than not, I have a number in mind, and by 7 a.m. I'm done, and I can go on about my day. I can then make breakfast for my kids, or my wife, or all of them. I get the bottle ready for my youngest. Um, I'm drinking my cup of coffee, watching some YouTube or watching the news and seeing what's going on. I go to the gym. I go for walks with my wife and my little one while the other two older kids are in school. I watch a movie. There's so many things that I've done by 7 a.m. Sometimes if I have to work, I get in at 8. Before I work, I've already made money. Or on my way to work, sometimes I take public transportation just because I want to sit down and look over on my phone and trade or sell options with my on my phone. And this is a game changer, guys, right here. This is a game changer because I can very well, sell options while I'm on my way to work, and I haven't even signed in to work, and I've already made $500, six, $700, $1,000, and it's absolutely possible. But you have to take it one, you have to take it seriously, and you can't be scared. Now, I understand that fear is kind of like a human emotion, right? And it's okay to be a little nervous, especially when you start off. But if I was if I was able to talk to my younger self 20 years ago, 15 years ago, I would say learn to have an iron stomach. Seeing volatility is okay, and be patient. Especially when it comes to trading, because a lot of times when I started off, just nervousness would make me pull out of a trade, right? And I would lose money. And the more I trade, the more I become a seasoned uh, option writer, the more I see that sometimes the best trades and the best moves are the ones you don't make. Sometimes crossing your arms like this is the best thing to do. Sometimes doing absolutely nothing will actually make you more money because this the market moves very volatile sometimes. And one day you're going to be down 40% on specific trades or options, and one day you're going to be up 60%. And this is when you have to remember that bulls make money on this market, bears make money on the market, but pigs get slaughtered. So don't oink around and be greedy and try to be a pig, because you're going to end up, having the market go against you again. And that's how I learned to take money off the table. Sometimes taking 20, 30% in a contract that's 12 months, and then you make 30%, 35% in the first month. That's okay. Take the money, take the win, and cross your arms, see what happens, and then sell another covered call. Same strike date, right? And do it again. I've sold the same contract for the same strike, same price, everything, sometimes 15, 20 times. Company like SoFi, I was selling, I think, 2025 and 2026 covered calls forever. And it's not, until like 6 months ago that it went against me, but I already made a lot of money in premium. And now I'm sitting at, $12 2026 contracts, but it doesn't matter, because if I get taken out, I'm going to get a nice amount of cash on that date, and I'll be able to then wait for my opportunity to go back in, or I'm just going to pivot to another stock, which brings me to my next point. There's always another stock. So don't fall in love with a specific company and say they're going to take my shares away. Um, that's the wrong way to look at things, man. Those shares are not yours. Okay. There is no magical uh, birth certificate or certificate of ownership, right? That says these are my 1,000 shares and they belong to, so and so, and they're gonna be forever here mine. It just doesn't work like way. It's all digital. So don't fall in love with a specific stock and think, oh my God, I don't want to sell, because then what's the point of you being in the market? The point in the market, or the point of being in the market, is to generate income, to make money, right? So that your companies make money, and then you can buy low, like I said, and sell high. If you then um, do not see that, I suggest that you take a step back and kind of be honest with yourself, and think in terms of what is it you're trying to accomplish, right? What do we got here? Um, Cannon Fodder is saying, these aren't normal times. Not good. I like the Rugman. I like the Rugman myself, my man. I really, really do. And that's exactly why, I think that it would be a grand stupidity to get rid of him, because then you would be, one, you will send the stock market down. It just, you because then you would get rid of the line that says, there shouldn't be politics when it comes to the economy. And although we all know that, yes, there's some politics that can affect um, the economic world, it should not be political, right? And so I think cooler heads will prevail. I think people with real money are going to step in and say, no, no, don't mess with our money, because that's not what we do. Things will happen. So I think that's what's going to end up happening. I think Jerome Powell is going to do his last year. I think he's going to run things the way he wants to run it, and then we don't know what's going to happen next year when another Fed chair gets confirmed, right? But for the most part, I think it's going to be. I am sorry to say, I think it's going to be somebody who's going to probably. Um, it's probably going to take interest rates back to zero, and it's going to be pretty bad when it comes to inflation. But it's still going to be one of those where it's going to be 0% interest. Companies are going to go wild borrowing, and it's going to be a frenzy, man. So I'm looking to make money. At the end of the day, that's why I'm here. Now, I'm looking to make that money tangible. As soon as I generate the numbers that I have in mind, I'm going to go straight in and dump that money into the principal of my house. That's what I'm looking to do. You know, you guys can have your own plans. I suggest you have plans A, B, C, D, and E. But it's kind of the plan that I have in mind. I don't want to be in debt if we hit like a ridiculous crash, and I don't want to, own a ridiculous amount of money on my house. Although, um, we did work on work. We did work on our interest, and I think um, we redid the contract, and we're at like 2%. That's the last number that we had, so that's pretty great. And I just don't see us moving for a very long time. All right, let's see what here. What Discord? What's the Discord, my boy? Thanks for the info. You know what? I'll hit back. I'll hit you back on that. If you leave like an email or something, I'll let you know. Dude, Phase, Yo Savage finally cut the live. Right and chill. That's what I do. Yeah, man. That's the best way to approach it, right? You can definitely get real negative and complain when it comes to how the things have turned out, how the market has taken a nosedive, right? But at the end of the day, if you've been writing covered calls, you're sitting pretty at this moment, because especially if you wrote in the money or like right outside the money, but just there. I see that at this point you've been making a nice amount of cash, and if you're smart, you've been either reinvesting it or you're saving it, and you have it on the sideline for what may be coming, right? Nvidia was just like in the 80s, and if you took some of that money and you went in on Nvidia in the mid 80s, I think bravo to you, great move. Do I see Nvidia going lower? I do. I see it at like 75, but nobody ever knows. However, taking an entry point at 80, 85, perfectly fine. Nvidia will recover, right? And I mean, look at what happened with Netflix. Netflix got chopped down to like 180, 150 at some point from like 400, and everybody thought Netflix is done. Well, guess what? They just had earnings yesterday, and they're over $1,000 a share at this point. So you have to have conviction when it comes to your stocks, right? I was actually watching some YouTuber today, and he was talking about borrowed conviction, and I totally agree with him. I agree that people that are watching me, and you hear about the companies that I talk about and where I'm in. Um, I don't suggest you jump in the water and buy companies just because the savage is investing in them, right? Because I have very high conviction in the companies that I invest in. I have done extremely a lot of research when it comes to putting my money on the line. However, you have not. Not maybe on the companies that I have, or maybe you have. But if you are just beginning in the game, or you're just buying companies because a YouTuber said so, I suggest you do a little more research, man. Because let's say the market goes against you, right? Let's say Nvidia goes to 50, right? Let's say Nvidia goes to $50, and let's say Tesla goes to 125, 150. Let's say Microsoft goes back to like $90. Amazon goes to like 90, $80 again. If you bought these companies because a YouTuber said so or someone else said so, you are going to feel very silly, because you're going to say, man, I lost all this money. People like me, I have conviction on these companies that I research, because I've researched them and I've looked into them. So if they went to half what they are right now, I don't look at that as something bad. I don't look at that as like something that's negative and that's going to wipe me out. One, I have a diverse portfolio. And two, I would love to go back and get SoFi at $6 again. I would love to get C3A.ai at 12, $13 again. I would love to buy Unity at 12, $13 again. It's just one of those where like I'm licking my chops. And as somebody that's bearish in the market, like as a bear, right? That's what I dream of. And I'm not playing around when I say I'm a bear. I mean it. I mean it. This is my picture of me in Tahoe. All right, just so you guys know, this is exactly what I look like in Tahoe, and I'm saying what's up because I'm a bear at heart. I have my reasons why I'm bearish in the market, um, and and like I said, I do my research and I have a number in mind, right? So, um, I love to buy companies on the cheap, because if I invest in them and I know a number that I have in mind, I know what it is. If they get to that number, I'm completely fine letting them go. The point of the matter is that I make money, right? And then I go to the next stock, and then the next stock, and then the next stock. Right now, RXRX, which is another of the companies that I invest in, was just at like $4 and change. Oh my God, I went nuts. I think I bought like 2,000 shares. And so, anyways, It recovered. It's like 550 now, and it's gonna keep on recovering. And if it doesn't, then I'm gonna buy some more because I just absolutely love that company. I know what it can do. I know where it's going. I've actually gone to events where the CEO is actually speaking in a small room to people, and I've asked him questions. I've seen the numbers. I've seen the data. I've seen the clients and the contracts that they've signed with. I am in, just like I was in, and I'm in C3.ai and Unity, um, and I was in Palantir. I was pounding the table on Palantir when it was $9, $10, $8. I was like, oh my God, please, people. When it was $20, I was pounding the table, telling people it's going to go to 25. And when it was 25, I was like, people, it's going to 30. And you know what? It's not me bullshitting you. You can look at my videos. You can go to my videos a year ago and look at what I was talking about. It's one of the Savage 10. It's one of the Savage stocks, man. And I was pounding the table and I was telling people it's going to go to 30. It's going to go to 40. Palantir is a $100 stock. I said that. And people either believed me or they didn't. It doesn't matter because I have conviction in the companies that I invest in. I know where they're going because I've done an extreme amount of research on them. However, it does not mean that they are that there's a bubble around them, and if the overall market is tanking, that they're going to be solid and be green. There's this thing called contagion, right? There's this thing called margin call. Sometimes when people are margin called, especially big outfits, they have to sell stock that they've made a ridiculous amount of money in because they have to come back and use that money to cover their shorts that they've lost money in. And so, anyways, that's part of it. What else do we have here? Dude says, I agree 1,000%. Learn to read earnings and know your stocks. That gives you confidence to ride on them. Absolutely, I agree. Knowing how to read, a basic a basic sheet, right? It's a big deal. Learn how to read the earnings and learn how to read um, the guidance because that says a lot about a company. Also, look at the past. Look at the CEOs. Look at their board. Look at their CFOs, their CIOs. Where do they come from? Are they newbies or are they somebody that's seasoned and has been around at other successful companies and now is trying to build another company? Those are things that can absolutely help you out. Um, Dude Face is asking, how do you determine the price? How do you use charts or volume RSI? Um, you know what? It's gonna sound like bullshit, right? But you got to take into account what you don't, right? I mean, the RSI helps, I guess. You got to look at the graphs, of course, but that's more for me selling covered calls more so than the number I have in mind to let it go. For example, eh, my entry point is kind of my cue, right? So if my entry point or average um, for a company is, let's say, $5, if I sell at 12, $15, I 3x my money. I'm totally okay with that, right? Um, it also depends on how bullish I am on a company, right? So, company like Palantir, I knew it was going to go to 100. Did I know it was going to go to 100 so quick? No, I was thinking 5 years down the road, 3 years down the road, right? But you never know. However, when I did sell my cover calls, it was 40s and 50s, and it ran, and I pushed them over to 70s, and now I'm waiting for 2026 to come around, and then 70s I'm getting taken out. So we don't know what's going to happen, right? But I've taken a ridiculous amount of premium already. So if I get taken out at 70, great. And if there's a more bearish sentiment on the market, and the shares go to 60, 50, 40, guess what? I get my collateral back and I'm able to write on them again. So it's not like I don't know that it can go back to 100. So I'm totally okay because my average on them, was $8. So if I get taken out of 70, guess what? I'm laughing like a fucking clown because I almost 10x my money. And isn't that the point of the game? Isn't that why we're in the market? Um, Same thing with Unity. I sold. I think, matter of fact, yesterday I sold some $28 covered calls on Unity. I'm just trying to raise cash at this point. And I saw what I saw in the market, and I also had to kind of make some lateral moves because I wanted to buy back some covered calls, and I didn't want to go on margin. I'm trying to stay away from margin. Sometimes if there's no other way, I'll go on margin, which I'm against. I do not recommend anyone, especially someone that's starting out, to go on margin because you're going to get smacked in the face. But if you're a seasoned trader or a seasoned options writer, and you have a very good plan on how you're going to move your money around, it's totally okay going on margin to buy back covered calls or cash secure puts. So then you're generating cash, right? And that cash flow is then going to help you to buy more covered calls back, or cash secure puts, and then you're going to be able to then free up more cash flow, and then you're going to have a bigger amount of cash flow, in which case you can then go off margin, and now you have raised cash, and you won't pay any interest, because if you do it within the same day, there's no interest to pay. And that's how I make my moves, right? I could go into the nitty gritty, but like that's kind of the layman's term. Is basically using margin to cover um, my cover calls, getting bought back, or cash secure puts, and then once that money's freed up, I'm off. I'd be known to go on margin, maybe to sell some cash secure puts on stuff that I absolutely know. Um, Again, nobody really knows what's going to happen, and this is not financial advice. But if I have a very good feel, because I've traded these stocks for a couple of years now, and there's some knee-jerk reactions on the market, and they get oversold, and that's when I look at RSI, right? You look at RSI, or you look at DMAs, right? Especially when there's a death cross, and so that this oversold, that this the company's good, nothing has happened. The company's still the same, but it's just the market took a shit, and it's just an overreaction. That is when I go and I take a position, and I say, hey, I'm going to go $20,000 on margin. I'm going to sell some cash secure puts on this company and this company and this company, and I'm going out to a couple of months out, maybe a year, and then it's basically a money grab, because then what I'm doing is I'm generating cash from thin air. That is not really right, but it's a better position than using margin to sell covered calls or naked puts, which is worse. So you can argue how smart of a move that is. I don't like it, because it just means that I didn't have emergency funds, or I didn't really want to touch my emergency funds, just because shit can happen. They go lower, in which case I'll go into my emergency funds to cover. So again, that's kind of how I do it. Is there a specific magic 8 ball, or am I like this great trader that's like fucking Einstein IQ? And no, I'm fucking dumb, dude. Just a regular person. But I got a lot of experience now. I've been doing this for a very long time. And I know the stocks that I've been trading, especially stocks that I've been trading 2, 3, 4 years. I get to see them all the time. I see how they move. You become. I don't want to say that you become kind of like one with the stock, right? That's bullshit. But you get to see how it moves, right? You start having a very good feel on how things are gonna go, and more often than not, I'll tell you that right now. I actually make some very good calls, and have I gotten caught with my hand on the cookie jar? Once or twice. once or twice. But again, I have plans, right? I don't recommend anybody making sudden moves and just going on margin um, because they see this great opportunity. And I assure you, there's smarter people than you that have gotten fucking destroyed and wiped out by going on margin. So don't be that person. Have a plan A, B, C, and D, and know how you're going to cover. Never invest when you're not willing to lose. Right. All right. See, so that's basically the gist of it, man. I have a number, like I said, based on you know what my average is, right, on the stock, and I'm okay letting it go at a specific price point. Let's see here. Uh, James of Misty Tree. Good evening, Lucky Three. What up, James? How you doing, brother? Let's see. I'm starting to grasp the concept. This is James again. I'm starting to grasp the concept you have been modeling of many more small trades that can pay off within a week or so. That's helping me make some money short term and fold arms with my 6 month leaps. Yeah, bro. Listen, I honestly at this point usually um, I like to take big chunks from covered calls, so I go like 4, 5, 6 months out when we are in a bullish market because things are going up fast, and at some point people take profits, right? And when they take profits, the stock market goes down a lot faster than it goes up. So it's those big swings where I like to capitalize on. And so let's say, for example, GME. Actually, no, GME is its own beast. SoFi. SoFi ran to $18, right? Um, People thought it was going to go to 25, but I was like, you know what? I'm totally okay selling SoFi covered calls and bringing in $2, $3 per share. Uh, we cover calls. And if it gets taken out, I'm getting at least $15 off of it because I sold $12 covered calls, right? Did I know it was going to go back to $9, $10? I absolutely did not. But I did know that we were running frothy, and I know we were overbought because the RSI numbers will show you that, right? You can see what them. You look at the MACDs, and you can look at just the frothiness of the overall market, and we were overbought, and so I said, this is the this is the number I'm okay with, and this is the date, and I went out like a year. And look at what's happening. It just went back down. Those cover calls I sold, I was underwater for a long time. Now I'm like 30% up, 40% up. And I'm not going to do anything about it. I am honestly I am letting the market, I'm daring the fucking market to take me out. I have around 100 $12 covered calls expiring January 2026. And I'm daring the market to give me $120,000 on that day. I am daring it because it will be a beautiful thing to get a gift for New Year's, which is getting $120,000 falling on my lap on that day. Because guess what? I'm going shopping, baby. And if I don't go shopping because we're up high, I definitely will be looking at positioning myself as soon as we get the first big tanking and going on some cash secure puts and some shit. So it's my approach. That's just the number I had in mind. Worst case scenario, I get taken out and I get $120,000 on that day. My average is 8. I sell at 12. I got $3 or to $4 for every covered call. Where's the error? What is wrong with that? Absolutely nothing. Now, let's say for whatever reasons, SoFi is $11 or $10 on that day. Then I get my 10,000 shares back. And guess what? Gonna sell covered calls again. And I'm gonna dare the market. This time I'm not gonna go that far though. I'm not gonna go a year out. I may do 3 months and then just dare the market to take me out at 12 or 13 or 14, whatever. But that's kind of the approach I'm taking. So usually that's what I do. Because of the way things are going now, and because of the volatility in the market, I'm actually doing the opposite. I'm doing cash secure puts out a year or more, so that I'm able to take a big chunk now. So, for example, SMCI, right? SMCI was just I don't know, like $27, $28 not too long ago, and I sold some 25s for 2026, and then I sold some 30s for March 2026. Brought in like about $8 or like $9 per share. That's a lot. That is a lot. That's almost one third of what of why it's. I brought in like 40% basically, right? So I put in, I say I bring 30%, 40%. I'm happy because worst case scenario, I get a stock that's $30 right now for 25, right? Or I get and that's basically taking into account the premium, right? The stock, the $30 cash secure puts, I got $8 for. So realistically, I'm getting it for 22. The 25s I'm getting for like 19 or for like $18. So either way, that's the position I want to be in because I would totally be okay um, getting those shares at that price point. Now you can argue, what if the stock is $20 on that day or 15? Nobody knew it was going to get to that point. In which case, if it is, great. That's the bear in me because I actually want the stock to drop to that point. That's why I did the cash secure put so that it can get to that price point and I got premium now. Because if it gets to that point, then I'm able to then do other cash secure puts so that then I can average down and get my average lower. And so when it does run, I make more money. Does that make sense? All right, let's see here. Uh the visual. My bad, I missed your response. Would love to trade with y'all. Yeah, just the visual art. Like I said, comment uh after the after the video, right? Comment and leave like an email there, and kind of say leave spaces so that I can make sense. Otherwise, it may get raised, right, or flagged. But leave spaces, and then I'll put your name on, so you can go on the Discord with us, man. Totally okay. Anyhow, so what do we expect for this? What do we expect for this Monday? I mean, I've been saying it all along, man. We're in a bear market, guys. We're in a bear market. You know what I'm saying? I don't know what has changed. I don't know I don't know what people think is going to change. Like even if for whatever reasons, the tariffs are lifted, right? We still have very high unemployment. Um, there's a lot of people that have stopped looking for work because they run out of unemployment, and so those they get taken out, right? They don't count. Um, Look at the 80 to 100,000 government workers that were just fired. Those numbers are still working themselves out. They just got fired. Give it a couple of months. Wait for credit card defaults are already up. By the way, wait until the real estate market really starts defaulting, right? People really start having a problem paying their mortgage. That's going to be, I think, I don't know, it's going to be interesting. Um, the tariffs, I mean, they're going to take a little bit to hit, but they are hitting. A lot of companies are downsizing right now. A lot of companies are very, very nervous, right? And especially those in the trades, um, people that work in lumber, carpenters, construction, engineers, logistics. I mean, there's so many things that are intertwined, right? Um, it's all gonna eventually come home to roost, right? and it's gonna be interesting to see just how the market navigates itself. I think that once uh, companies start coming in seriously with um, lower margins, and um, they start basically saying, that our forward-looking statements are going to be something that we're looking at negatively, and the numbers that we're looking at uh, in the forward guidance are going to be a lot lower. And so, I mean, I think United and a couple of other companies actually came in, and then they didn't have two earnings per se, but they basically said, well, if this happens, then this is the forward guidance we'll give you. But if this happens, then this is the forward guidance. That doesn't happen. That really doesn't happen unless there's like some turmoil in the horizon, right? And that's kind of what's happening now. And so banks are going to have less money because people are going to dip into their savings. I think, the automobile industry. I mean, who's buying new cars right now? Interest rates are still high, and um, you know the situation with the all these workers that are leaving Nebraska and West Virginia and Georgia and Florida. Um, where is that money going to come from? Those people that were here either illegally or just decided to leave the states because they were anti-immigrant. All that money that was spent in those states is not going to come from anywhere else. So there's going to be a lot of pockets that are going to be hurt, but it's all going to be one big wave of negative economic downturn, and I think that we still haven't seen that yet. So the dollar is weakening as we speak. Um, it, I just don't see things working themselves out into the positive anytime soon. Are we going to have green days? Are we going to have good news at some point, even in a bear market? Of course. Just like in the bullish market, we had some really negative days where the Dow dropped 800 points, 1,000 points, right? It happens. And just like we had, a week and a half, 2 weeks ago, the one day where we went up 3,000 points. I mean, we're going to have those days, but we're in a bear market. People may not want to accept it, or some people may just be, trying to look at the brighter side up. But for the most part, I think we're in a bear market. All right, what do we see here? Small businesses that feel the tariffs now. I agree, D visuals. I agree. A lot of small businesses are already talking that they have, a runway of 2 months, 3 months, and then that's it. Especially small businesses that were generating between 100,000 to $250,000 in revenue a year. These are very small businesses, right? And sadly, these are businesses in southern states, and they're going to feel the pinch, and they're probably going to go bankrupt. But I mean, that's the name of the game, right? I mean, elections have consequences. I try to stay away from politics talk and telling people exactly how I feel and where I stand. Although I'm at times very passionate about how where I stand, but for the most part, that's the reason I like the stock market, because the stock market doesn't give a shit whether I'm Hispanic or Asian or black or white, or from Poland or from India, from Afghanistan, from Singapore. It doesn't give a shit. What it gives a shit is that I put money in it, right? And that I make it work. I make it happen. That I go into companies and I move my money around um, and get in the game. That's what it cares about, right? So don't be scared. Don't be scared. Take the plunge. Right now is a beautiful time to start, dipping your toe in the water and seeing if this is your thing, and if it's not, you'll know. But I'll tell you this right now. It's really good to be in it, man, especially when you figure it out, because you can make income uh, every day, 4 or 5 times a week. You'll be able to generate income to alleviate your financial stress in your life, and that's kind of why I have this channel, because I try to come in and be that person that I wish was out there when I started investing. You know, don't be scared of the market on Monday. I think we're going to see some red, and we may see a little green towards the end of the day. Red again. For the most part, we may have a green day or two, but we'll see. At the end of the day, we're still going to be in a bearish market. Um, just like last week, I told you guys that that this week we were going to be red, right? Remember, I told you we may see a day or two green, but at the end of the week, we're probably going to be down. Chances are, because of just we're downtrending. And guess what? We had one green day, and then we had 3 red days. But at the end of it all, I think we're down like almost 1,000 points on the Dow from where we started. That's what a bear market is, my friends. It's not just going to be down, 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 down 1,000, 2,000, 3,000 every day. No, that's not the way it works. We're going to be down, 700, one day, then another day we go up 700 or 600, then 800, then back 400, then, 500 down, and then 400 up. But overall, it's downtrending, right? So that's just the way that a bear market works. And it's not to say we're not going to have some green weeks. We may have a week where we make 3,000 or 2,000 on the Dow. But for the most part, everything is screaming bear market. Don't fight the market. Take what it gives you, right? We all want the market to go up, right? We all want our stocks to go up, but you wanting it to do that is not going to make it do that. So just look at what it's telling you, right? Look at GME this week was telling you I'm at $727. So what does that tell me? The stock told me sell a fucking covered call for $30 for June, taking three and change of premium. Take $4 of premium. Great. That's what I did. Same thing with Unity. The stock, was down and it recovered to like almost $20. And what did it tell me? It's like, okay, it's not the perfect number I'm looking for, because I like to write when it's in the 20, 23, $24 area, but I wanted to bring some cash in, right? So I just wrote some 28 for 2026. So some $28 strikes for January, and I brought in, 250 or something like that. And in 10 of those contracts, right? That's $2,500. What is wrong with that? My average is like 15 on it. I'm selling at 28, so that's $1,300 per contract that I'm making, right? If I was to take it taken out, and then I take the premium. So I'm really selling for over 30, more than doubling my money. What's wrong with that? Absolutely nothing. So this is the way you got to look at things, right? In Monday, when the market opens, if it's green, sell some covered calls. And if it's red and you have some money in the sidelines, right? Look at where the 52-week low is for the company you're looking at. Is it near the 52-week low? Would you be okay going 10% down on it and then receiving some cash to buy that company? That's your decision, but it's not a bad entry point at all. What am I doing this weekend, you ask? By the way, happy Friday. All right. I know that this is Good Friday, and I'm a Catholic, not a practicing Catholic by any means, but I am a Catholic, and I love this time of the year. And so I like to give thanks for. But guess what, guys? Your boy's going to Napa. So that's what's going to happen with some premium cash that I generated this week. I'm taking some of that little cash, and I'm going to take the kiddies to join, some folks in Napa, and we're gonna go to a nice restaurant and gonna take some cool pictures, and I'm making my money real. right? I'm using the premium that I generated, the income that I generated, so that I can generate happiness with my family, so my kids can smile, so that I can take pictures with them. And then if we do have a really nasty downturn, instead of just looking at my stocks and getting angry and holding the bag and then just you know getting angry at myself for not selling at the high because nobody told me when to sell, I'm laughing my ass off, thinking, hey, everybody is holding the bag, and a lot of people didn't sell covered calls, and I did, and look at where I'm at with my covered call money. Great. I can't wait to get my stock back because I get my collateral back, and then I'll be able to write some more covered calls on it. That's the way things work, man. Let's see what do we got here. The visual saying buying open this week. Good. That's a good entry point, man. It's near the 52-week low, right? And if Donald Trump has his way and he gets rid of Jerome Powell, whenever they do cut interest rates, and they will cut interest rates, we're going to 2% again, if not 1%. Open is going to $20 a share, $15 to $20 a share easily. You are going to kick yourself if you didn't take a position now. I'm holding several thousands of shares, and my average is around $1 at this point. I'm happy as a clown. I'm still doing cash secured puts on it, generating 10-15% every month. And if I get put those shares, great. If not, I'll do it again. And I dare the market to take me out or put me those shares. That's just the way it works. Anyways, it's over an hour now. I just wanted to come in for half an hour. God damn it. I always say that, and I never do it just because I I, I like to talk, I guess, and I really like I really like the companies that I hold, and I specifically like talking to people and making them aware of what's out there and the opportunities that I wish someone would have told me about, when I was younger. Anyways, I'm the Savage of Wall Street, guys. Thank you very much for watching. Uh, you know what? Maybe I'll go live when I'm in Napa so that I can show you guys, hey, look, not bullshitting. This could be you. All you have to do is get in the game. Anyways, remember, cash is king and credit is power. But chaos is cash, baby. Peace out. Savage out, baby.